Hey everyone, this is John Feneck with the Feneck Commodities Report, and with me today is Don Durett,
Hey,
founder
John.
of Gold Stock Data. Hey, what's going on, Don?
Yeah, let's do another interview.
Let's do it. Today we've got James in the queue from Guanajuato Silver, GSVRF in the States, and GSVR in Canada. He'll be coming on in about 25 minutes. First, we're going to go through some macro, and man, there's a lot to talk about. It seems like every one of these interviews, we're seeing much higher prices for our sector, and that's a really bullish sign. So, Don, I'll defer to you to see where you want to kick it off.
Yeah, I think we should really start with the gold and silver prices and the HUI. I think those are kind of the three biggies for me. So the HUI, it's kind of climbing a wall of worry. It's down 10 points today. Last I looked at 278. And which isn't great. So the miners, everybody, it's kind of been, you know, I don't know if warned is the right word, but kind of understands that you don't ever go up in a straight line. So,
Correct.
so the HUI's, it bottomed out at 200 in February and it's been, been running up, 250. I consider 250 kind of the neutral level. So it's 278. There's still stocks are still cheap here, but once you get above 300, that I think that's kind of where the bell rings.
Hmm.
And we're seeing some really low volumes in Newmont. I think Newmont is a real stock to watch here because that's really, in order for the sentiment to change in the miners, we need Wall Street to participate. And if Wall Street's going to participate, they're going to buy Newmont. So Newmont's volumes have been really, really low, even though you got gold at 2,300, almost 2,400 today, 2,378. Yesterday was over 2,400. Monday was over 2,400, and no basically participation from Wall Street. Now the other, so basically opportunity still, which I think is good because this opportunity isn't going to last that long. Um,
Okay.
Once we get above 300, I think that's the bell ringing, and that's when these stocks are going to get pricey quickly. I think Newmont, I think it's traded around $44, maybe went down a little below that today. It was at 44 yesterday. I think Newmont races to $60 really fast once you get to over 300. And then once that happens, once Newmont starts running, everything's going to start running. So we got this opportunity over the next, who knows, 30, 60, maybe 90 days of buying opportunity. Um, so there's that. I also wanted to mention silver prices. Last we're seeing China silver prices this week, Monday night and Tuesday night, and then we'll have tonight. But Sunday, Monday, and Tuesday, silver prices in China have been really, really high. Last night they closed above $35. We have the highest premium as we speak right now that I've seen. So the premium right now, Shanghai to COMEX is 17%. We
Wow.
haven't seen anything like that. So you got 31 in US, 35, and that's a 17% premium right now. So let's see what China does. And China has not been backing down on these prices. I don't know what's driving it, but basically China just ripped from 25 to 35. It's like, woo, there it
Yep.
went. And it hasn't slowed. So this premium is out of control. And silver's down $1.15 today, which is kind of crazy when you have China up and New York down. It's like, what the heck's going on? And it's not as if the dollar, it went up to, push, silver down. The dollar's up teeny tiny bit today,
Mhm.
104.9. I mean, that's not enough to push silver down or gold down. So just going over gold and silver and those, we'll talk a little bit about macro, but um,
Sure.
I,
Well,
oh, yeah,
yeah.
go, I'll
Let me
stop.
just comment on a couple of those things. I think you're right about Newmont and watching that stock. I would also argue, though, that that's about 12.5% of GDX. The other two large ones are Barrick and Agnico, and all three of those had decent earnings in April. So I would look at those three, the other tickers. So it's NEM, AEM, and GOLD. That represents 30% of GDX. That's a good proxy for where GDX is headed, where HUI is headed, right? The other thing I would comment on is yeah, this move in silver has been electric. I would argue that on May 17th, Friday, when we went from 29-ish to whatever 31.40-ish close, I mean, that was a 6.3% move in one day. That was indicating to you as a silver investor, like you need to get on this train. It doesn't really matter to me if it goes back down to 29 to test that level. It's that we broke above 30 with such force. That's something that you have to, as an investor, look for. We saw that with gold, right? We saw gold break through what was, previous resistance at that 2060 to 2100 level with huge force, and it didn't look back, right? And so that's what I think we're going to see with silver here as it, goes back to test that, kind of 32, 33 range first, and then 35 second.
Yeah, I agree. I turned bullish, um, actually prior to that silver breakout. I turned bullish in early April based on the gold breakout.
Mm-hmm.
Gold breakout was, really, really strong in early April. I just thought that was the bell ringing
Yeah.
for the gold breakout. We haven't had the bell ring yet for the miners, but
No.
I think for gold and silver, I think, the bell rang for gold first, and then it just rang for silver, and now we're waiting for it to ring for the miners. But I felt that, early April, that the correction was over, and we were going to get now we're going to get and it's over for both gold, silver, and the miners. It's just a matter now of just let it unfold. So the correction is over that started. It's been in effect since August of 2020. So I think now, I think we have higher lows, higher highs for the next 2 to 3 years. So
Okay.
I say this: we're in a new bull market here. So any corrections, like you said, you're not really worried about going back to 29. I'm in the same camp. I'm not really worried about any deep breakdowns here. That's not what this is telling us. This is telling us that we're going higher. There's no breakdown coming. And now we can kind of pivot out to why there's no breakdown. So
Mm-hmm.
any dip you get, it's an opportunity. For instance, today, Guanajuato down 3%. I'm like, yeah, that's opportunity. Let's go buy that thing. So
Right.
any sell-offs, I think are opportunities, which we're not going to get a lot of them. Guanajuato's at 20 cents US. I mean, this thing could be at 40 cents US fairly quickly, and those bottoms are gone. It's kind of similar to when Avino was down at 42 cents. It was like, it's not going to
Mm-hmm.
last long. And now Avino's at 80. So a lot of these stocks are going to do that. They're going to go up. But let's talk a little bit about why we think
Sure.
that we don't really have to worry about gold and silver breaking down, for instance. So we've had in this correction, this 3.5+ year correction, we've had many, many moves up and then way back down, where
Correct.
you silver go to 27, 28, and then all the way back down to 21. It's huge, retraces. We think that's over. I think that's over.
Yep.
Don't have to worry about those anymore. Now I think we're in a bull market. Okay, so let's look at why. So Wall Street, if there's two basically sets of news. You have the news coming out of Wall Street, which is basically reflected by the mainstream media and all your cable news channels. And they tend to be, 90% plus, bullish, and they tend to be cherry pick all the positive data. So right now, I
Yep.
mean, if you turn on the channel, it looks like everything's great. So they focus on, the number one thing they look at is the stock market. They think the stock market is emblematic of the economy, and I don't think it is. And then the other thing that they focus on is unemployment, because as long as unemployment is good, that means the consumer's good, and so that means, GDP is okay. And so those are kind of their three numbers. Then the fourth thing they look at is that the Fed's going to cut. So if the Fed's going to cut, it's going to, that's going to help the stock market, and that's going to help the consumer. So those four data points are kind of the only thing they really look at. And then they look at, companies independently, and I just think that they're really ignoring, and I'm sure you're going to follow up on that. They're really ignoring some of these underlying factors that you normally would never see in an economy with 1 to 2% GDP growth. I mean, it's kind of insane,
Right.
these factors, these underlying factors, that I just think that once the bubble kind of pops a little bit, all of a sudden all these other data points are going to show up and everybody's going to go, wow, look at that one, look at that one, look at that one. Is a ton of bad stuff. Steph Pomboy, I love, she loves to drop this truth bombs. I mean, I just love it. She said, all I see is S, I see Sierra, that's all I see. She's so blunt, She's like, because when you basically take all of the data points and you put them like on a cost benefit analysis, put them on a whiteboard. Here's the good stuff and here's the bad stuff. Like the
Mhm.
bad stuff is a lot worse, and everybody's ignoring it.
Mhm.
I really feel that once a catalyst appears, I don't know when it's going to happen. I think it's going to happen before the end of July. But once a catalyst appears that basically shows that the economy is kind of rolling over, the stock market's rolling over, I'm just very bearish. I just think it's just going to explode. Once it turns, it's going to turn fast. Once you get unemployment, so I'll tell you the three factors to look at. I'll turn over your three factors to look at for when this thing's going to pop. The very first one is unemployment. So if unemployment,
Yep.
because Wall Street looks at, so Wall Street, that's the only thing that's going to convince them, right? So
Right.
once unemployment gets above 4%, if you look at those charts, once it gets it above 4%, it just usually starts spurting upward. And the trend, if you look at the unemployment right now, it's been going up. It's at 3.9 right now, and it was like 3.3. So it's been trending up. And once it gets above 4%, that's gonna, I think that is gonna be a big one. That's when people start getting nervous. And then the other one is GDP. And so you got to get GDP down. That'll start scaring the hell out of them. So you got to get it below 1%. PMIs, they didn't care. PMIs have been under 50, and nobody cares.
Yeah. No one cares.
Consumer confidence down, nobody cares, right? So
Yep.
it's unemployment and GDP, and the other one is interest rates. And we're starting to hear Wall Street, and we're starting to hear the Fed talk more. There was actually an article today saying that some of the Fed members are more hawkish. And so that's why the 10-year has been sticking around 4.4. If you get this 10-year above 4.5, so you get it to 4.6, anywhere in there, you get to 4.6, you get GDP below 1, you get unemployment above 4. I think I think those are triggers.
I agree. I guess the question for me, we have a little bit of a different outlook in that I thought it was going to be a rally through Memorial Day, call it late May, and then June and July, not sure. August is always a tough month because you've got Jackson Hole and a lot of people traveling, a lot of people away from their desk, right? So you have thin volumes. I personally believe September through November, there's going to be a lot of pain in what you're talking about. It just might take that long, personally, I feel. And we're going to see some of that activity driven by the Fed decisions, right? We've got one coming up June 12th. There's a 9% chance the Fed's going to cut rates. Not going to happen, right? July 31st is a 24%, no, actually a 35% probability as of this weekend, which is kind of shocking. But if July 31st doesn't happen, I think that's when you're starting to see some August, September panic set in because that September meeting is going to be super important, right? And then what do you have coming after September's Fed meeting? Well, you've got the BRICS in October in Russia, by the way. You've got the U.S. election in November. That's a total wild card, and we'll probably have more clarity on what's happening by that time, of course. But those are big deals, and if we're not getting, like you said, if we're not seeing the higher GDP, the higher non-farm payrolls, the higher retail sales, the higher housing numbers, I don't think any of that's really going to happen. I mean, non-farm payrolls has been pretty high, but like if you look at the last read, it actually fell.
Well, I would say the non-farm payrolls have been actually very weak since July because they've all been part-time jobs. Full-time jobs have actually
Sure.
been negative since
Yeah.
July. They've been
I'm just
pathetic.
talking about the headline number versus the
Yeah,
estimate.
yeah. It's because the mainstream media, they just look at that headline number and they
Yeah, they
never
don't dig
see
in.
the others. They never mention the fact that it's basically all part-time jobs. And I
Right.
think a lot of those part-time jobs are second jobs for people that just can't pay their bills. literally
True.
cannot afford their bills. So they have to, I got to go find another job and make another, $300 a week, just to pay, $200 a week just to
Pay
pay my
rent.
bills. Yeah.
Yeah.
So got a lot of that going on. So yeah, we got a little bit of time. So I want to mention, because earlier I said that there's more bad than there is good,
Mhm.
if you will. So I want to kind of dig into that a little bit.
Okay.
Um, the first one I mentioned is the jobs, the job market, whereas the full-time jobs have been going down, and that's kind of in tandem with our demographics. So you have the boomers are retiring right now at the fastest pace they've ever retired. The boomers are
Yes.
basically all getting out of the market, and when they get out of the market, their income goes down, and their spending goes down,
Right.
and and their jobs are replaced by lower salary people, and so because it takes a while to build up. I mean, these guys are basically retiring at the top of their pay scale,
Yeah.
and so Jeremy Grantham has always brought that up, is that the U.S. has a demographic problem because as the boomers go off, it's really hard to replace that. Um, then the higher rates have not gone down. I mean, we've been at
No.
5.5% here for a long time, and we're going to stay there. I do not think they're going to cut in July unless something breaks. But if we're like this, there's no way they'll cut. They won't cut until something breaks, in my opinion. And so the higher rates are impacting housing absolutely, because who it's really difficult to afford a house at these rates. And then
Sure.
autos, we're seeing Carvana doing well, and the reason why is because people are like, I can't afford a new car. I'm going straight for the used cars.
Right.
So the foot traffic right now, I would imagine, is just pathetic at car dealerships, and it's not going to improve.
Yes.
GM had a good first quarter, but I don't think that's going to hold up. I think we're kind of in a kind of a quasi recession here because of these high rates. It's going to feel like that, I think, for car dealerships for a while. Um, and then you have uh, credit cards. We're seeing credit card delinquencies go up, and that's because they can't afford these higher rates. It's like they're maxed out, and then the higher rates kick in, and all of a sudden their budget gets expanded. Um, so so the higher rates for longer. Then the other thing about higher rates is the higher rates are really hurting the banks.
Right.
Uh, and the banks. When do you have a banking system this much, having this many problems during a strong economy? Makes absolutely zero sense.
Yeah.
I think we're going to see a lot of bank failures. Not large banks, but medium sized and small banks. I think we're going to see a lot of them.
Yeah.
Uh, and banking
Jamie
system.
Jamie Dimon had just said last year that he thought there'd be a lot more, failures this year, which hasn't happened yet, but he is running the largest bank in the world, right? And he also said last week that we talked about in our newsletter that he basically had said about inflation that it's not going to go down anytime soon, like the Fed had hoped. And so you have the largest bank CEO saying this, right? I mean, that carries some weight. He knows a lot about what's happening in the banking system.
Right.
We haven't had the kind of follow through post, March 2023 crisis that, if you're short financials, you'd like to see. However, to Don's point, I think with rates being this persistently high, if we don't get a cut in June, not happening in my opinion. July 31st is a question mark at this point. Then you're really putting a lot of chips on the table for September's meeting, and that's what I'm talking about, right? Markets don't like uncertainty, and you're going to have an uncertain market here if we don't get cuts in June or July.
Right. Yeah. So going back to the higher rate theme, consumer discretionary spending continues to get kind of squeezed. And then in tandem with the higher rates, you have the cost of living increase. Well, nothing's really coming down. So that increase in cost of living is biting into the consumer, and it's not going to get better anytime soon. So that's a big headwind for the economy, especially when 70% of the economy is consumer spending. Now, I would say that 10 to 20% of consumers are kind of flush, and they have no problem spending money. But below that, it starts getting tighter and tighter. because of the higher cost of living.
Mhm.
And we haven't had this since the late 70s. This is kind of a new thing, and it seems like that we're looking at the stock market, and we're looking at these other numbers, and we're thinking that under the covers everything's fine. But that's what Jamie Dimon is basically saying. He's like, this, under the covers, it's really not that pretty. And for us, how are we going to turn this thing around? It just, if the Fed lowers rates, is that really going to do the trick here? Um, it's like, I really feel that the train is, going too fast around a corner is going to fall off the tracks. So another, big one for me is something that we never even heard of, which was this idea called fiscal dominance. And I didn't even hear that term until about 6 months ago. And fiscal dominance is a big problem, big problem. So what fiscal dominance is means that the economy is dependent on fiscal spending by the government.
Mhm.
So you get this fiscal dominant situation where if the government cuts spending, the economy goes down. It's and so right now we have a 1.5 trillion deficit, and it doesn't look like it's going anywhere but up, and they can't cut, which is it's kind of a doom loop, because if they don't cut, then the bond market gets weak, gets more fragile, because they're borrowing, because they have to borrow more and more money. So starting in July, the Treasury has to borrow $280 billion every month. So
Mhm.
that's when you get into that doom loop. And I've been saying that the Fed, there's nothing the Fed can do to prevent a recession or to restart the economy. And if I'm right, that means that the bond market's in big trouble, because the fiscal dominance will stay in place, and then they can't stop the recession. So if we go into recession, then the deficit will get bigger, because that's the way our deficit works. If you go into recession, the federal government has to spend more money on the state level. It's like contracted in. They can't turn the states down. The states basically say, okay, I need more money for unemployment. The feds have to give it to them. So the deficit will go bigger, will get bigger. So that the fiscal dominance becomes a bigger problem. You can't cut.
Mhm.
And then it becomes a bit of a doom loop. And then this is the key to it all. And this is the reason why I like gold and silver stocks, is I actually saw this coming. What happens is that the money printer, which basically Bernanke said we can never go bankrupt because we can print what we need. Well, that's not true. You can only print if there's demand, because if you just print it on your own, you create inflation,
Mhm.
and you cannot monetize it all. So if they start borrowing $300 billion a month and the Fed is the only buyer, no, that doesn't work. The money printer breaks. And so at a certain point, the Secretary of Treasury goes to Congress and says, I can't borrow 300 billion a month. And once that happens, the money printer broke, and it's over. It's game over. And I'm saying that's the end game here. That's the end result. That's what
And
everybody's ignoring.
yeah, and the head of the Treasury is one of the former heads of Fed, Janet Yellen. So that'll
Yeah,
be interesting.
yeah.
I think it's in summary, just there's a lot going on behind the scenes that is not reflected in broad market pricing, right? And so you have to pay attention to this as an investor. We've said this, I think, on our last two shows, and now for a third time. Like, look at your investment accounts. Most people have most of their money in their retirement accounts, right? Look at what that has done for you and your family from March of '09 to now. Just use it, look at it through like a rational person's mind, not someone who looks at Bitcoin every day or tech every day. Look at it like, hey, I made a lot of money here. Like, take some money off the table. I'm not suggesting putting it into mining stocks or gold or silver. I'm saying take some of that off the table and just get, we call that keeping some powder dry. You just don't know what's going to happen in this economy, right? I mean, there is so much going on in the Middle East. You saw what happened with, the Iranian president, just recently here. What if that was not an accident, right? Like, I mean, how would the market react? Gold and silver love fear. The broad market hates fear. Like, these are the kind of things that I think rational investors need to be looking at, and taking some money off the table in general to preserve capital, because of the things that Don had pointed out in terms of just everything costing more, right? So do the prudent thing for what's right for you and your family. But I think, taking a step back sometimes to look at your personal situation is not a bad idea given a 15-year bull run. We'll leave it there, and we'll introduce
I,
James.
I,
Go
I
ahead,
had,
Don.
I had one last comment. So I'm not really excited about what gold and silver stocks are doing right now. I mean, yeah, they ran from the HUI went from 200, it's up to almost 290. But I'm not really excited about that. I'm not really happy. And the reason why is because I'm investing for the long term and I'm investing for big alpha. And the only way that's going to happen is if you have a risk off trade. And we don't have that right now. It's a risk on. The miners are getting pulled up because gold and silver are kind of leading here. I think gold and silver are leading because they know that there's problems coming. Gold
Yep.
does not go like this unless there's a problem. So until that problem actually arises and we get a risk off trade, I'm not going to be happy. So I want a risk off trade, which we had from 2000 to 2011, and we haven't really had it since. We had it in the 70s and we had it in the 2000s, but until that comes back, I'm not really happy. I just wanted to make that point. But I also want to make this point is that I think that the fear level that we had in 2008, and everybody remembers that it was around there. The fear was like really, really high, right?
Of course.
I think it's going to be higher this year than it was in 2008 when everything starts turning, because the reason why fear is going to just explode is because we're going to recognize about all these problems I talked about this dependence on debt and how in the hell we're going to keep doing that. It's like,
Mhm.
oh, we got a problem here. And so once people start recognizing that we can't live on debt anymore, it's like, oh my goodness. And that's what's going to push gold and silver higher. That's what's going to push the miners higher. Okay, now I'm done.
Okay, Don, thanks for the adding that last piece. And with us today is James Anderson from Guanajuato Silver. James, great to see you again. Welcome to the show.
Thank you very much. It's the Don and John show. I've been sitting back here for the last 30 minutes going, oh yeah, yeah, no, I want to say something. I want to say something. So many very interesting, good comments that you don't normally hear in, in a lot of mainstream financial,
For
um,
sure. You won't
financial
hear it at all.
perspective, or at all for that matter. So anyway, you guys do a great job. Thanks for having me on the show.
All
Thanks,
right.
James. So, James, just real quick, I mean, you and I saw each other in Washington, D.C. at the conference, 3 weeks ago, and you were kind enough to talk to some of my clients and I at dinner, and walk us through why the story would improve when silver prices were on the rise. And you were absolutely right. We did that dinner at 13 and a half cents US. We're trading at almost 20 cents US now, but it hit even higher than that this week. I think the stock is out of the woods, in terms of making a bottom, which I thought was a ridiculous bottom to begin with at 11 cents. But now we're headed in the right direction, and we're excited to hear an update from you. So why don't you give us, a 10-minute overview, and then we'll ask some questions.
Well, yeah, sure. Okay, that sounds great. I guess for the let me just further comment on what you just said, John. We are a silver mining company. We're a precious metals mining company with a silver focus. About 50% of our revenue is in silver, about 40% in gold, and then about 10% in base metals. And that's a very different mix
Sure.
of metals than most of the silver mining companies. Most of the silver mining companies are really base metal producers kind of disguised as silver mining companies, and they have perhaps a large amount of silver as byproduct. Because of that, because of the fact that we've got older mines that had been underinvested in, because of the fact that we're a new company, we are very, very geared to the silver price. To comment on what you just said, a move from $22 silver to $27 silver is absolutely enormous for our company. A further move to $32 silver, I have no the superlatives fail me really about just how important that is to our
Sure.
company, and the stock market gets it. I think that that low, that bottom that we had on the stock, maybe a couple of bottoms really, in the last couple of months. I can't remember what you called it. Kind of silly. Um, but I think that the market in that moment feared our ability to be able to keep moving forward.
Sure.
And then instantaneously, I think we've shown them market improvements in our operations combined with the better metals prices, and that's a very, very poignant, powerful combination in a small cap mining company. So for people who don't know very much about Guanajuato Silver, I'll give you the maybe the 6-minute recap. How about that, John?
Sounds good.
Um, uh, we we're different than a lot of the junior exploration companies in that we make gold and silver. We've got 4 mines, 3 production facilities, mostly in and around the city of Guanajuato, Mexico. But we also have a very high grade mine in the state of Durango, Mexico, as well, called Topia. And I do like to contrast, let's say, us as a producing silver and gold mining company with some of the silver explorers. If you want direct bottom line exposure to the price of silver, there is no better way to get it really than with Guanajuato Silver. Our mines, as I mentioned, are older mines. Some of them have been in production for over 400 years. The district of Guanajuato is one of the great silver mining districts of human history. Our Valenciana mine in Guanajuato at one time in the 1700s was producing about 30% of the whole world's silver. So we've got 3 mines there, 2 production facilities. These are within Guanajuato, and then a production facility and mine in Durango. These are they're all underground operations. So any of the talk about limiting um, open pit mining either in Mexico or elsewhere, that's a very deliberate decision on my part. I think that underground mining is very, very quickly becoming back in vogue. There's obviously much less of a footprint, either environmentally or socially, and I think that there are more and more people and more communities that are willing to embrace underground mining as opposed to having big open pit mining. The All of these mines are produce a concentrate, especially the concentrates that we produce in Guanajuato are very, very clean. We sell those to Ocean Partners, which is a British firm in Manzanillo. So I guess just this morning we put out our first quarter results, and that is a reflection of a lot of the things that I've been talking about. All-in sustaining costs down 6% quarter over quarter. Cash costs down 6% quarter over quarter. Record production of silver equivalent to just under 1 million silver equivalent ounces. Record revenue up 7%, and a lower net loss for the quarter, which I think we had, I don't have the numbers in front of me exactly, but generally about $23.50 for realized silver price, and 2,068, I believe, for realized gold price, more or less. So you can imagine today's spot prices and what that would mean for revenue and profitability. So that's the overview for you. I'm happy to answer any and all questions, and even talk more about Don's doom loop, which he mentioned earlier, which I think not enough people understand the problems that Treasury have with regards to that doom loop here right now.
Don, you want me to kick it off? Is that okay?
Yeah, go ahead.
So, James, great quarter, and I know that lowering all-in sustaining cost was an objective for you every time we talk, and great job on reducing that 6%. Um, I would say, you're a 4 million ounce producer per year, roughly, right? I mean, that's sort of what it seems to be on track given last quarter and this quarter. So, how do you get to 5 or 6 million ounces in your view?
I think faster than a lot of people think. And I think almost exclusively we can get to those numbers by ramping up our current operations. I've just come back. I apologized earlier for my casual attire. I just flew back late yesterday from Mexico. I spent 10 days looking at all of our operations. So in 10 days, underground at Topia, underground at San Ignacio, underground at Valenciana, and at El Cubo, as well as our other mine that's more of a development operation right now at Pinguico. There are development opportunities at all of the mines. And I think this probably isn't the right forum to, get into each and every one of them. But, can we move production over the next 6 to 12 months by 20%, 25% at all of the different operations? I think that the answer is yes. And I think that we have the personnel in place to be able to do that. Um, our new chief operating officer, Carlos Silva, has been extraordinarily successful, serially successful in expanding operations throughout Mexico and Bolivia. He is a graduate of the University of Guanajuato, and he's driven to poco poco, poquito poquito, one step at a time, move production higher and move costs lower. The one other, just a comment, I guess, on one of your comments, John. Um, Outside of the third quarter of last year, where we had some problems and at a number of the different operations, and costs went higher and production lower. If you look at overall, since we started production in this company from a standing start, um, uh, production has gone steadily higher quarter over quarter over quarter, and really costs have been going down slowly quarter over quarter over quarter as well. So I'm happy that that's continuing, but I would suggest that like we're not done by a long shot. There are efficiencies that we recognize, maybe perhaps not daily, but certainly weekly, about how to be able to drive costs down further and production higher.
Yeah, it's a good point. I think, as a value manager, that's something that we actually look for in a company like yours or SilverX, where one quarter does not make a company. And you pick up the phone, you talk to someone like yourself or Jose Garcia, and you guys are straight shooters, right? That you tell us, hey, we had a hiccup. Here's what's going on. And I actually interviewed you, James, I think last year around that, and you were very forthright about things. And that's definitely something that investors look for. I think is just tell us the truth, right? I mean, like it's okay to miss, but why did you miss? Is it a systemic problem, or is it a one off or two off? Right? I mean, that's okay. So it's great to see you're back on track and lowering costs. I'll just turn it over to Don in a minute, but I just have one other follow up to what you said about Mexico. We've got the elections coming up June 2nd. I think every Mexican, silver producer, developer, explorer is being hit with a certain brush right now until we get some clarity there. Do you agree with that? I mean, I feel like a lot of the names that I track are just underwater and not really breaking out with silver's run here because they want to wait and see.
Yeah, so there's a lot of different things to comment on there. The most important thing I think is that for whatever reason, it has become um, fashionable to not like Mexican mining because of some of the throwaway comments that AMLO's said, because of some of the challenges that there have been in terms of issuing permits and that sort of thing within Mexican mining. But if you contrast it to trying to get a permit in Alaska or anywhere in the lower 48 to do any mining anywhere, if you contrast it to governmental mm, interface interaction in West Africa, if you're trying to put a gold mine in production in West Africa, Mexico looks pretty good, right?
Yeah.
Pardon me. Um, if you look at the fact that we were able to put 4 mines back into production within 6 months of purchasing them,
Yeah.
and like where else would you be able to do that? Not California, right? So I just think that there's a balance. Certainly there have been problems, and I think that there may well continue to be problems in terms of getting permits on a grand permits on a big basis. However, I will say this: with 4 mines and 3 production facilities, last year, our environmental department were issued either different levels of permits or acceptances from different levels of different departments within the Mexican government, Conagua or Semarnat or others. 52 different permits that we
Wow.
received. So it's not like everything stopped. Is it more challenging? Yes. But again, I compare that to friends of mine who have an exploration project in Arizona where it's taken them 5 years on forestry land, 5 years to get a drilling permit. And then, we're not talking about putting anything in production here, to get a
Right.
drilling permit for exploration. So I think it just needs to have some balance to it.
Yeah, great point. Don?
Yeah, two quick questions. The first one, you mentioned the ASIC went down 6%, but what did it, can you tell us what that is, or do we have to wait for the news release? What the
I
ASIC,
Right. So it issued this morning $20.19.
that's really good. I had you at 22, so you're 10% below. You said you were 6%, so yeah, that's a $20 ASIC. When you do that, I mean, the stock's gonna definitely pop. It's a good number. The other quick question I had was on your current website, you show your shares for March at 404 common and 560 fully diluted. What is the current fully diluted after your recent financing?
That's an updated number.
It
So what
says
Yes.
it says March on there. So the 404 and 560 is correct?
404 is correct. I am 100%, but and I'm pretty sure about the other one, Don.
560,
Um, I think the number's been updated, but
the date.
not
Okay.
the date.
Good, good. That's a typo.
Thank you for that, and I'll make a note of that.
All right, excellent. Okay, so yeah, I want to go over the positives first. So myself, I looked at my portfolio and I said, okay, which stock do I need to look at, that I don't own enough of? And believe it or not, and I have, a significant amount of Guanajuato, but I went down the list and it was like the one stock that stood out to me was yours. It's like, okay, Don, you can add to that one because of the risk reward. And the reason why is because my investing, I invest for long term for higher silver prices. So when I look at your company, yes, you have 4 producing mines, like you said. You have 25 million ounces of reserves, so you got a good 5 years. Plus, these mines tend to replace the reserves over time. So I think it's more of a 10-year mine life minimum for those 4. Plus, you have a really good chance of expanding that to 5 million. So I'm valuing the conservatively, I think, in 3 years down the road. I'm a 3 to 5 year guy. 5 million ounce producer. Well, some people call me crazy. I value companies at $100 silver, but that's kind of a maximum. But I think we definitely get to 75. But I like to use that theoretical maximum, right? So at 5 million ounces, let's say you have a $30 break even, and you're currently at 20 ASIC. So $30 break even is pretty good, pretty conservative.
Yes.
So I use $70 free cash flow. That's $350 million in free cash flow. Now, if you get margins of that size, and I think you will, so when you get huge margins, you're going to get a nice multiple. So I'm valuing you as a 10 multiple. That takes you to $3.5 billion. So basically you print about a 30 bagger. So for me, it's like, wow, it's a really good story. Now, you mentioned earlier that your 90% of your revenue is gold, silver. There's only 20 silver miners that call themselves silver miners in the world. And those 20, most of them are not pure. There's only about 5 of them that you could call pure, and you're one of them. So you
Correct.
fit that bucket, which is a really good bucket, right? You have all that leverage to higher silver prices.
Correct.
So, I look for companies that are what I think are solid 5 baggers with potential 10 bagger upside. And you're like a really solid 10 bagger with good 20 bagger upside. Very rare combination. So everything is you guys are looking better and better and better. So now, because silver is broken up above 30, your weakness was low silver prices. That was killing you. You know, $22 silver was killing you, 23, $24 silver, it was killing you, right? You've lived it, right? You lived it
Well, and
till
I think we had an $18 handle in October for a moment or two,
We
right?
did for a couple of
So
days.
yeah, so there were a couple of weeks of no sleep there. I can tell. I can
yeah,
tell that.
yeah.
Yeah,
So yeah, you've had a really hard time, but now $27 silver, you're, and I've said this, 27, 28, you're healthy. And then every dollar above that, you had $4 million in free cash flow. So, yeah, so now, so I'm basically telling people all the good stuff, but now I'm going to make you kind of defend your company a little bit. And this is
sure.
kind
Well,
of, this,
Donovan, can you just let me comment on those
yeah, yeah,
first
you can
few
come on,
things?
then we'll go to the next
Yeah.
subject.
Okay. So first of all, with the $3.5 billion valuation, well, from your lips to God's ears, as a mining CEO, I have to kind of be a little bit more conservative than that. However, let's talk about the fact that we're one of the very, very few pure precious metal companies with a silver component. Um, that is due to the fact that most of our production happens in and around Guanajuato, Mexico, and the unusual and powerful nature of the epithermal systems there. There may well be a base metal component to these systems at depth, but for the most part, in the Guanajuato area, that has not been. That it may well have been found. I can geologically discuss that, but it is not being exploited. And there's a 700-meter column at Veta Madre where people have been exploiting that for 450 years. To your point about, well, how much um, resources does this company have in sight to be able to mine for the next 5 years? And I think you're right. Generally speaking, we've got about 5 years of material in front of us here right now. But you're also right. These are very long-lived mines. It's hard on these narrow vein epithermal systems to be able to put more and more and more material out in front of you without kind of blowing your brains out with regards to um, uh, having to keep drilling and drilling and drilling. However, at Valenciana, people have been mining for 450 years, Cubo for 120 years. And although our San Ignacio mine is only about a dozen years old, that structure in that region has been known for centuries as well. So I think that, these mines are going to keep producing and producing and producing for a long period of time. The last comment that I would make is just our valuation. It's frustrating for me sometimes, just our valuation versus, let's say, some of the explorers. If you look at our valuation, our market cap, there are good exploration companies out there that maybe have the same market cap as we do right now. And as I mentioned, I've just got back from 10 days in Mexico. When I drive around and I look at replacement cost of $80 million for that plant, and the underground fleet, the jumbos, the long hole drills, the trucks, uh, you know, that is forgotten right now by the market,
Right.
but it's there, right?
I yeah, it's apples and oranges really to compare exploration stories and producers. It's apples and oranges. You really can't. It's you know, for me, I know I'm going to make 80% of my money from producers because producers, they can generate growth in a number of ways. Exploration, all they can do is add ounces and sell those ounces. So you can actually you're going to participate. So as the price of silver goes up, your balance sheet is going to get better and your multiple is going to expand. You get multiple expansion. Plus, it's like an exponential growth for you. You get multiple expansion, and then plus you get valued on your revenue and on your free cash flow. So explorers don't get any of that. And then in tandem with that, you can find more exploration, and then you can develop more, and then you can acquire. So you have all of these different ways to grow. And so the risk reward is, it's like I said, you can't even compare them. Okay, so let's go on to the next thing.
Okay.
And this is kind of the ugly part. This is the reason why I want your company to be perceived as a great company, if you will. But the recent financing was a little too high, and you're gonna have to defend it here. Sometimes I start off with the hard questions, but I save this one to
Sure.
the end because I want to know I like this company. I'm going to add to it, but I definitely want to go into this area because as investors are picky and they want, if you don't check all the boxes, they're going to get upset. And that financing you recently did, fully diluted, was about a 15% financing, and you paid off some debt with it. And you could have been more shareholder friendly, if you will. I don't like to see a producer financing more than 10, and you went to 15, and that was a little above and aboard. So I want you to defend that 10 to 15 and why you thought it was so important to pay this debt off when the cash flow is coming. Why didn't you have a little bit of confidence in future silver prices and think more about the shareholder? I want you to defend that a little bit.
Sure.
Sorry.
Well, I mean, I think the percentages that you mentioned they are a function of market cap. And, I think every CEO that ever lived thinks his stock price is too low, market cap's too low, and it should be higher. But the stock market is the stock market. And the stock market, rightly or wrongly, perceived us as relatively high risk, given where we had come from, especially from some of the stumbles from the fall. We will almost for sure do 100 or 120 million dollars worth of revenue this year, and yet we were walking around with $2-3 million in our treasury. Well, that's dangerous. And in defense of the shareholder, or a comment to the shareholder, my wife and I are very large shareholders of this company, and we bought every share either in the market or from a private placement. Now it's easy to see on the public documentation. So there's nobody that's more interested in shareholder value than me. But I also have to have a balance. And if you guys were talking about different macroeconomic things for the first 30 minutes of the conversation, I think both of you would agree. Well, we don't know if we've got some break in the market, and all of a sudden everything's no bid, including the metals, which we've seen on a number of occasions in our lifetime. And we've got gold and silver back up to, just for a moment now, how about to $1,900.20? What would that look like for Guanajuato Silver? And therefore, since we're walking around with not very much money, despite the fact that we've got over 1,000 employees and it's a real life company, I think that we were gambling with the employees, the shareholders' value, and we needed more money. Period. End of story. We became a little bit over levered too, in the downturn. Let me back up and phrase it this way too. I thought that the metals were going to giddy up about 2 years ago, and so when I took control of a venture exchange shell company called Van Gold, which had one little exploration project in Guanajuato, and then over the course of 3 years, we built it into this million silver equivalent ounce producer per quarter. Right? I always thought that the market would open up and go, yeah, James, here's 40 million bucks, and go and put these mines back into production the way that they should be. We've never gotten an injection of capital like that. When you look at the capex of, I won't name names, but when you look at the capex and the capex overruns of some of the mine builds that we've seen, hundreds of millions of dollars, we've never seen that. So I understand the percentage of dilution that you're talking about, but at the end of the day, what did we raise? We raised a little over 11 million Canadian. That works out to about 7.5 US. It ain't that much money. Not on a company that's doing 100 or 120 million dollars in revenue.
Right. It actually didn't upset me a lot, but I did speak to a few people that did upset a lot. They thought that you didn't need to raise that much money. They were upset. But me, I looked at it from the standpoint of how cheap you were.
Hmm.
Now, you did go down a little bit. I mean, when you dilute that much, my upside definitely got smacked in the face a little bit, but you're still super cheap. I mean, you're still a 25 bagger still. So I can live with that. I mean, it's hard to find 20 baggers out there. So if you're still a 20 bagger, you lived for another day. But my next question is, as far as shareholder friendliness goes, well, you mentioned you and your wife are basically shareholders, so you're definitely you want this company to be a 20 bagger, right? So point forward, as far as getting the perception, because right now you need to turn that a little bit. It's really difficult. Like I say, you lose your reputation, you never get it back, kind of thing. So how are you going to kind of turn that around and basically say, look, we had to dilute 15%. It was important for us to do it, but now going forward, we're not going to do that again unless we absolutely have to. We're gonna basically. Are you gonna try to be cash focused going forward? Are you gonna try, because there's companies out there that I talk to, CEOs, and they understand this idea of being cash focused on the balance sheet. So are you gonna try to basically have a clean balance sheet and 50 million bucks of cash there sitting there? Because I think those are the companies that get the good multiples. What's your opinion about that?
I agree with that. Would I vote for having our company in that kind of shape? Yep, absolutely, 100%.
That's the goal,
And it's not for our company. That's not going to happen overnight.
right?
Because of some of the challenges that we had and the
Well,
18
well, well,
silver $18 silver price, all of the
well,
mines that we took that were all capex hungry.
well,
You know, our balance
actually,
sheet got a little well, our balance sheet got a little stretched. And
actually, it could happen overnight. We could go to $50 silver this year, and that's $100 million in free cash flow for your company in 1 year. You instantly go there.
I'll be able to figure that part out. I'll be able to maneuver the company
Right.
um, effectively if we're at $50 silver.
Yes, but we could go to 50 this year. And like I said, you get $4 in free cash flow for every dollar above 30.
Yeah,
So you you can see what can happen to you in this year.
Yeah.
totally. No, 100%. I mean,
And so my
I
point,
don't. Sorry, Don. Go ahead.
yeah, so my point is that if that happens, that's going to be your focus. Clean balance sheet, a lot of cash. That's what we're going to try to maintain. See what happens to companies that grow. This happens all the time. It's I call it hubris. And what they do is they're like, hey, there's a bank over there that wants to give me 100 million bucks, and all we have to do is pay it back, 2 million a year. Let's do it. It's Hubert, and they don't, and that's not shareholder friendly. But then they say, I mean, I remember talking to First Majestic. It was about 2 years ago. They put a bunch of debt on their balance sheet, and they said, well, we don't have to pay it back until 2027, and only it's $1 million a year. And I'm going, that's not the point. The point is it's on your balance sheet.
Yeah.
Right. And they weren't cash focused. And now people hate First Majestic, right? I mean, I have more people attack First Majestic, I think, than any other silver producer.
Mm.
And I think a lot of it has to do with, yeah, they say they're shareholder friendly, but then they have debt on their balance sheet. You can't have it both ways. So if you guys, I mean, that's going to be one of the indicators that you're shareholder friendly, in my opinion, is if you basically, right now, I think you have about 8 million US debt right now. Is it
No,
eight?
it's more than that. We
11?
did, well, all of our debt currently is repayable in silver and gold. I did this very deliberately as well because it works as a natural hedge, right? I mean, the prices
Yeah.
go higher. We owe more US dollar denominated debt,
Yeah, but
right?
loans. Yeah, but loans though, long-term loans, not gold loans, but not streams, but just loans. How much do you owe? None?
Zero, I guess, would be the
Oh,
answer.
oh, okay. So yours is
Because
all
all of it's denominated in silver and gold, and
right.
the news release a
Yeah.
couple of days ago, we eliminated
But
the
that you got rid of five, but that's all part of your ASIC, isn't it? Because it's built into the gold stream.
uh, it it's not.
Okay.
Um, from an accounting perspective, that's separated,
All
as a
right. But it's part of your break even cost because you actually pay that out on a monthly basis, right?
correct.
Yeah, yeah, it's part of your break even. So, and you're, so even if you're ASA, even if you include that in your break even, it's still got to be 26, right?
Break even?
Yeah.
Oh, it's lower than that.
When you include this gold
Yeah,
royalty, it's 25. So
yeah,
that's
because
okay.
yeah,
Well, that's norm. That's kind of a industry norm then. So it's not exorbitant what you're paying out. Um,
correct.
yeah, so that's it's basically got a clean balance sheet then. That's awesome. So yeah, so again, for you to change the tone, if you will, of your company as far as, oh, hey, we are shareholder friendly. The key there is going to be balance sheet, cleaning up the balance sheet and not wrecking it. We're not going to do share dilutions, and then once I think, I've talked to you in the past, and I believe that you are open for acquisitions. I mean, if your balance sheet gets clean, you get 50 million on your balance sheet, you're actually going to go out there and look, right? You're going to think about, hey, we're going to grow this company. Am I right?
Well, yeah, 100%. That's how we've grown the company so far.
That's
And
what
just, I
yeah.
mean, what I've said in a lot of the different interviews, if you look at El Cubo, that's the best, easiest example. Well, we paid $15 million for it, right? Now on a company of our size, and where do you get that money? And then you need $15 million, and then you need another $15 million to put it back into production properly, safely. But the
Yeah,
last time it changed hands, Endeavor Silver paid $200 million for that asset.
yeah, yeah.
Right.
Okay, that brings up my next question. So have you thought about this? You're the CEO, and I know I would have thought about this. Is that your company could literally, the market cap could literally explode. Like I might be a 3.5 billion, but I mean, because right now you're like right around 100 million, but it could go to 300 million fairly quickly.
Very
If
quickly.
It's a lot of
Okay,
leverage.
right. So once you get there, at that point in time, you become a shark. And there's a lot of guppies underneath you. Like right now, it's not as easy for you to acquire some of these companies, but the bigger you become, the easier it gets. So
Yeah.
you've been thinking about that. Once we get to this size, it's like that company over there is going to look really nice. Um, for instance, this is really bizarre. I'm going to bring this up to you, but this is really, really weird. Is that Avino Silver is worth less than you guys, and they have 350 million ounces of silver equivalent. You talked about you're being cheap, but I think they might be about the same. They were below 100 million. Maybe they're higher now because they've doubled in size. So I guess they are above you. But you're going to be bigger than them. But they have 350 million ounces of silver equivalent. Well, they're a sitting duck out there. I'm waiting for who's going to buy them. The reason and their capex for building up, the mine they got from Coeur, it's very, very low capex, very low, and it's really easy to build. And they don't have any insiders. 80% of that company is retail. 80, so they have no protection.
Right.
Basically, somebody goes in there and says, "Okay, I'm going to offer you a 30% premium." They have to do it. Let's go bid. And the retail is like, oh, I like this combination, right? And the retail are all going to vote yes. So whoever goes in there, you don't even have to pay very much. I think anybody that goes in there and makes an offer for a vino, I think it goes through because I'm like, yeah, I'm going to vote yes. I mean, if a combination of you and I mean, you're a 20 bagger, they're actually higher. Did you know that? They actually print as a 50 bagger. So you combine your two because they're so big, 350 million ounces, right? So if you combine your two companies, it's like, oh my God. I mean, yes, I'm voting yes. I'm voting yes. I mean, have you thought about that? I mean, is there a reason why
Sure. I
you
mean, without any comments about Avino per se, I don't think that would be fair for me to do that. But
okay.
um, uh, you know, Mexico produces about 25% of the world's silver. Generally speaking, if you take out Fresnillo, which is the largest silver mining company in the world, and Peñoles, which also produces an enormous amount of silver, you take out the big guys, there's a whole bunch of a lot of smaller Canadian companies that have small mines. I include ours. Um, Almost everybody agrees that there should be some consolidation in the business,
Right.
I am 100% in favor of that. And one of the reasons is because, 20 years ago, 25 years ago, the smaller mining companies could survive, and they could be profitable and do good things for shareholders. Much more difficult today, just because of the drag from all the regulatory charges. And I mean, um, financial regulatory, stock market regulatory, environmental regulatory, all of the things that you need to do to act like a company. It's roughly the same costs if you're small or if you're large. So I think there's a certain size that needs to be achieved until before you get to um, efficiencies. And so, yeah, David Wolfen, I think, runs a great operation. They like to think about it as a family operation. Him and his father, have been working it, for 50 years, I think, with reference to Avino. But there are a number of other opportunities, and like you said before, Don, comparing the producers and the explorers, kind of like apples and oranges. It's true even when you're comparing the small producers. They're all a little bit different. They're in different states. They've got different social challenges. They've got this, they got that. Some of them have big resources, some of them don't. So it's a difficult comparison process, but a combination of these companies is I think that it would be generally beneficial for most of the shareholders of the companies.
This is my very last question, and I would like your opinion on why you had trouble raising money. It's like nobody wants to invest in gold and silver miners. At the time, when you were raising the money, nobody believed silver would get above $30. For instance, I mean, you were only raising 11 million Canadian, but you couldn't find a strategic investor to come in and like do a half warrant. Wasn't anybody out there. Why do you think that is? And do you think that's going to change?
Well, I think, and all of those comments, I think, are spot on. With regards to whether it will change super fast. And if another 6 or 8 weeks even of the type of market that we've got, everybody's mindset's going to be changed. Generally speaking, we've been living in an environment where nobody likes Mexico. Now, that has given Guanajuato Silver the opportunity to buy Cubo for pennies in the dollar, and to buy 3 other mines and 2 other processing facilities for pennies on the dollar. But we've had that, trouble kind of scraping around for the money necessary to be able to do that. No strategic investor, yeah, 100%. The Mexican companies are not writing a check into, smaller Canadian companies. The larger silver companies that, as you mentioned too, Don, aren't necessarily even silver companies, but they got bigger market caps, bigger names, and they got silver in their name. They're generally not interested in investing in Mexico too. I think the perception of Mexico as a mining jurisdiction, as a mining investment destination, will change just as fast as people change their minds about silver mining.
Right. Excellent. I like that
Good
answer.
point.
Okay. We've taken enough of your time.
James,
Gentlemen, thank you so much.
yeah,
No, really appreciate the opportunity and the questions. All very apropos. Let's do this again soon.
for sure. James, may I just close with one thing? Just throwing my 2 cents in about your release this week on the debt. I personally feel that any mining company with a debt overhang is, to a certain group of investors, at a disadvantage. And so I applaud what you did with paying off that 5 mil, because it's optically positive, right? Like, I mean, I really think that you could point to dozens of mining companies in the last decade who went over their skis in 11 and 12 when gold and silver prices were roaring, right? Paid up for things and are no longer around. Let's not forget that. So that's point number one. And secondly, I just wanted to follow up with a final question. You had mentioned, you spent about 15 million Canadian for Kubo, and then about 15 million Canadian to refurbish it and get it to where it is now. And that Endeavor paid 200 million roughly Canadian. And that's just, again, as you put it, pennies on the dollar. Can you just tell us real quick what Great Panther paid for the assets you have now, and how much you paid for them, please?
Yeah, so the Kubo comparison is very easy, and the numbers that you've got, just one correction, all of those numbers are US dollars, but
Got it.
the same percentages. The comparison's a lot more difficult with the Great Panther assets. We paid almost exactly the same amount of money. It's about $15 million. It was a combination of shares and cash. Um, and it's more difficult because Great Panther, subsequently went bankrupt. It's more difficult because they purchased the assets not all at one time and from different people and invested in them over a period of time. However, two production facilities. Let's just look at Valenciana. I mean, this is it's a 450-year-old mine along one of the great silver mining structures of the whole world, right? What's that worth? All three of the mines have resources, have identifiable resources. All of them we were able to put back into production either within 6 days or 6 months of our acquisition of them for 15 million bucks. Like, try and do that anywhere else in the world. In the bottom of the bear market, people give stuff away, and mining is replete with stories of that. At the top of this market, if we get anywhere near the kind of action that Don's describing, people will think I'm lying about what we paid for these assets.
Right. Okay. That helps.
Great
Thank you,
interview.
James.
Yeah, great interview. This one's for the books here.
Absolutely.
That's very kind. Cheers, gentlemen. Thank you so much.
Thanks, James.
Thank you, James. Well done. We got about 5 more minutes before I have to bail today. Why don't we just recap? I'll just let you talk and give your thoughts about how James presented today.
I've been saying that, the two companies that get healthy, the two, silver stocks that get healthy the fastest, that is Guanajuato and Silver X, because they both have a lot of silver. Guanajuato is more of they don't have as much precious metals, but they do have some gold. But Guanajuato is much better, 90% gold and silver. But they both have a lot. They both have a lot of leverage. They're both super cheap. And so once you get to $27 silver, they get healthy. And then every dollar above that, it's just like I said, you get to $50 silver, and boy, this company is just instantly, a player. I mean a big player, not a small one. They go from 100 million to a billion. I mean, if you go to $50 silver, I think they jump to $1 billion. Maybe not that much, but at least 500 million. It depends on investors. Mexico, people don't want to buy Mexico, then it'll only get to 500. But if people start buying it, but this stock has some massive leverage. They have a clean balance sheet now. It's kind of the sky the limit. They're going to grow production. That's what you want. You want a company that's going to grow. They're going to grow production at least 20%, I think, and maybe more. But the other thing that's beautiful about this company, I think, is that once they get a clean balance sheet, and when I say clean, I'm talking 50 million in cash and no debt. Once they get there, I got to believe they're going to grow through acquisitions. He mentioned it. There's opportunities out there for sharks. And they're in the right place. They're in Mexico, where there's a lot of opportunities because there's so much silver mining going on. And so they're going to have the capital. These other companies don't have it. And these other companies, they don't have the capital, so they become the shark. So I like that. So I like the, I don't think we're going below $27 silver. So so from a risk reward standpoint, I think it's really strong. And the upside, as silver prices take off here, like every dollar it goes up, they get $4 million. So you got $5, that's 20 million. So it starts to add. And then once they get the 5 million, then their leverage goes, every dollar it's 5 million. So, and he actually mentioned the word 6. You said 5 to 6, and he said that's doable. I'm not even valuing 6, but I don't think 6 is crazy talk. Penguito, I didn't mention this when I asked him, but once they get a lot of cash, I think they're going to start poking a bunch of holes in Pinguito. And
Hmm.
Pinguito could be a big mine. I think
Right.
it's got 20 levels. The thing hasn't been mined in how many years? 50 years or something.
Something
So
crazy.
they could start once they start poking a bunch of holes in Pinguito, that could be a big mine. I mean, in
Yeah.
theory, who knows how big it could be? Because it's good geology. And so when they start getting money and they start poking holes, there's a lot of so it's really hard to see negatives other than Mexico. I mean, people are like, I don't want to invest in Mexico, right? But if you take the Mexico, it's all underground mining, so I'm not worried about that. The royalty problems in Mexico, I think, are coming, but not in the near term.
Right.
So
Well, you've got the election June 2nd. We know that it's going to take months for any new cabinet to get figured out in Mexico, right? That's a fact. I think it's December that you're going to have the new woman who's
September,
leading in power.
they
So
come, they come,
so
they come in September.
September, yeah. But I think December there's another. I'm not sure. Anyway, let's just say that there's plenty of time between May here and then, either it's September or December, where this is not an imminent threat. I think what I was trying to get across in the interview was that all of these Mexican juniors are getting tarred the same way, which is silly because this one is actually a producer and a large producer, potentially a much larger producer, and it's underground, right? People are missing this. Like it's not an open pit. It doesn't need open pit permits. That's a different. That's a differentiator, I think, here with Guanajuato.
Well, it's actually not just Mexican mines. The multiples that we're seeing are below average right now because sentiment is so bad.
Right.
So, it a lot of these Mexican mines that are undervalued, a lot of them they're either open pit or they're perceived to be open pit kind of thing. But eh, they're not significantly versus like a lot of these other companies because it's just people haven't come back into the miners yet because we're still in this risk on. So the multiples are actually, I think, 50% below normal, if you will. And
Hmm.
I think these stocks are going to go up 100% fairly quickly
Hmm.
as the multiples go back to kind of a normal area. And then you get the mania phase, and then the multiples get above average. So we're below average, we'll go back to average, and we'll get above average. That's my expectation. And then if we get crazy mania, then you get well above average. Then you get blow off. You get the blow off multiples. And
Right.
I think we'll see blow off multiples. So you're buying a lot of these companies now at about half off. I think kind of where they're going to be soon. And then you could be buying some of these companies at literally less than a third of where they're going to be just on multiple expansion alone. Um,
Yep.
that's I don't think people realize. He mentioned it. He basically said that people are not going to believe what he paid for some of these things because I
Hmm.
think valuations are going to go kind of potentially go nuts if we see these higher prices, say above $2,700 gold, above $40 silver. Until we get to those levels, it'll be kind of below. It's going to take a while before the sentiment kind of comes back. But on the whole, I think Guanajuato looks, as of today, it looks really, really good. I don't see how many stocks. I mean, I've been doing this for a long time. It's very, very, very unusual to see a stock that looks like a solid 10 bag or a 20 bagger upside.
Yeah.
It's those kind of stocks do not happen. Usually, when you see stocks like that, they always get acquired.
Hmm. I think
I
this one will be different in that, James and his wife have a lot of skin in the game. I like that they were buying in the open market or through private placements, not just huge awards to a CEO, as you see so often in our sector. Um, but all that said, they have enough to block a takeover. And I can tell you, James does not do all of that he just talked about doing for a 30% premium. Like this guy understands that he's building something special and he's not willing to give it up, right? And
no,
so to your point, if it is going to be a 100% move from here at, let's say, 18, 19 US to 36 to 38, I still don't think it's a takeover play for where he's coming from. I think he sees the picture that you see, which is the longer term picture.
Yeah, I do not see this company getting taken out. I mean, it's always possible, but I think the odds are low, because he sees the potential to build this into a really big company. You notice when I said 3.5 billion, he didn't blink. I think he knows that that is actually a possibility. 2 to 3 billion is not crazy talk. He
Right,
knows he knows he can get to 1 billion fairly quickly, and that's without even doing any growth, really, just on his current size alone.
right.
Uh, he
He's got
knows
some
that.
great assets there, and he picked them up for pennies on a dollar. It's
Yeah,
just,
he,
as a value manager, you have to love what he's done, and now he's out of the woods, right? Like there was a point last fall, as he has even admitted on this interview and in prior interviews, that it was a little dicey, right? Because you get
yeah,
down to 18, 19, 20, even you're like, oh wow, I mean,
this
my costs are much higher.
right. This is the company. They're the strategic investors have been voided that I think are going to show up once they start doing the math. And that's the one thing that I've been mentioning about Avino. Avino, I think, has been a family-owned business for 50 years. They basically by I think it's La Perilla, right? La Perilla? No,
Hmm.
Preciosa, Preciosa,
Preciosa.
yeah, Preciosa. When they acquired that from Coeur, that was their undoing because now their company is so cheap. They're just they put a big bullseye on themselves. I mean, there's just no. I don't think Avino exists for another year.
Is that
Um,
right?
so I actually like Guanajuato better
Hmm.
because I just don't think Avino is going to last.
Well, yeah,
And
and then you have to worry about who they're partnering with and if you like them,
yes,
right? And so
yeah,
why not put some money at least with Guanajuato, who clearly has a vision and with a leader that is going to look at the long term, whereas the other company you just mentioned, albeit with 350 million ounces of silver, maybe they can't look at the future because of
80 80% of the shareholders are retail.
yeah,
You never see that. Never.
it's rare.
It's usually 25, 30, 40% retail. You
Yeah,
80% retail is unheard of. Well, the board of directors is like the retail owns us. They have no protection.
yep,
Zero. It's
yep,
like so the way that it works is if the board gets an offer, they can't really say no. They can't basically say, well, we're not going to, see, no, we're not going to vote on this. I think legally they have to
they
present it to the,
legally have to entertain it.
yeah. So how can they stop it? It's impossible. So
Yeah,
they're total sitting ducks. I've said that right around $35 silver, right around there, they will get taken out because somebody will do the math and they're like, this is an 8 million ounce company, 8
right,
million. And
right.
I can buy it for $150 million. It's just they made themselves a total sitting duck, and so I'm totally bummed because I thought that Coeur owned when Coeur sold it to Avino, they took shares. They took a bunch of shares in Avino, and
Yeah,
so they were the Avino strategic shareholder. All Coeur had to do was increase that to 20%, and they could have just ridden that thing. Then they could have acquired it or they could have used it as an investment. But
yeah,
they
they messed up there. I mean, that Core has made some good decisions in the past, like with Wharf in 2015, picking
yeah,
that up for 99 million. I mean, I bought a ton of CDE. This is the ticker in 2015, and even January of 16. I was amazed at some of the fills I was getting. But then that was one of my four horsemen, if you will, for 2016 was CDE because they had acquired a lot of stuff cheap, like Hecla did, like Golden Minerals did. Like a lot of these companies were really tarred in 2015. Well, even AG was acquiring then,
yeah,
and those four silver stocks, man, they kicked in 2016 when things started to roar. I mean, there
yeah.
are different companies today, and please don't go out there, listeners, and go buy those four names just because I mentioned them. I'm talking about 8 years ago, but it's companies do have to do a better
Yeah.
job, I think, of making each
Yeah.
decision.
I would have never thought that Coeur would leapfrog First Majestic. Never would have thought, but
Right.
Rochester was a fantastic, when they expanded Rochester, it was a game changer for them.
That was a great call.
Now it's a better stock than First Majestic. I never would have thought they would have done that.
Well,
Uh,
yeah, Mitch Krebs, the CEO, used to run the Silver Institute. I mean, these are things you look for, right? It's that and Keith gets a lot of attention at First Majestic, rightly so. I mean, but at the same time, there's guys like Phil Baker at Hecla and Mitch Krebs at CDE, and then you go down the list. There's a lot of good leaders in this sector that have been aggressively acquiring things at much lower
I,
prices, and that's
I
something
think
that, as a value
yeah,
manager, you look for. This is what Guanajuato did. I
if
mean, they
right, if
basically went out there and bought stuff that the other
what,
people either
yeah,
couldn't buy
what,
or didn't have the guts to buy.
yeah. So I mean, one of the things you want, I mean, the reason why Coeur has turned into a lot of people don't like Coeur, but I like it a lot. One of the things they've done is they've kept the pipeline going. They've kept the growth going, they kept the pipeline going. So now they have Silvertip. Silvertip is their next mine. They're
Right.
drilling the hell out of it. That's their next mine. They're always thinking ahead. Where do we? Wharf was the one they did Wharf, and after Wharf they did Rochester, and now they're doing Silvertip. That's what you have to do as these companies. Hecla's doing the same thing. They bought LXCO, and they're
Yep.
all they have these two projects so the thing about Coeur and Hecla is they do spend a lot of money, they have a lot of debt, but they keep their pipeline going.
Right.
That's what First Majestic is where they dropped the ball. They don't have a pipeline of there's no silver development projects right now. I'm like, where's your growth? Like they have no silver growth for the next, they don't have anything on the board. Everything is all they're doing is staying the same. Well, they basically talk about exploration at their existing projects. We have all this exploration potential at our existing mines. Well, that's great because you're replacing your reserves, so they're going to
Yep.
stay, 22 million ounce silver, which is basically become a cash cow, which is okay. But I want companies that are forward looking, got these, pipelines going on, right?
Mhm.
And so Coeur has that. Coeur's all-time high is $70, and everybody says, well, they'll never get back there. Well, it wouldn't shock me. I mean, I don't think they will, but I think they'll probably get, maybe get to 40, which would be outstanding from where they're at now. I mean, they were at $2 not too long ago. And I
Right.
think,
Yeah,
I
they
think they,
bottomed in that low two range, and now they're slightly above five.
yeah.
But
I think they get to 40, which is amazing. And who knows, they might even go all the way back to 70. So yeah, so Coeur is actually a good story. Hecla is the leader, in my opinion, as far as in the silver space. Um, I actually have Silvercrest ranked a little higher than Hecla, just because they have just a pristine database, no debt, a lot of cash. I think they're going to grow from a risk reward standpoint. Silvercrest is like a real safe play, but
mhm,
I'm always going to have more money in Hecla than Silvercrest, a lot more money in Hecla, because Hecla is it's the total leader in the space, just because they're the big shark and their mines are in good locations. But yeah, that's the one of those you got to own kind of thing. But
yep.
those are kind of
Well,
the names.
no, it's great, Don. Thank you for the insight, and we should leave it there.
All
But
right.
let's do it again next month. And thank you
Yeah.
everyone for
So
watching us.
we're gonna do Vox next time.
Most likely going to be Vox Royalty, VOXR. Yep.
All right. So we're gonna learn about the royalty. I don't think I've interviewed a CEO of royalty. It'll be interesting to get his feedback on my theory on royalty plays. See if he laughs or he pushed back, he gets angry. It'll be exciting.
It'll be exciting. Yeah, Kyle's a
I don't know if
competitive
anybody's
guy.
ever heard me talk about my theory on royalty plays, but
Yeah.
you definitely want to show up, because we'll definitely get a reaction from this CEO when he hears my theory. He's gonna it'll be interesting how he defends it.
Well, I think they do a really good job, and they only have 51 million shares out, which is one of the reasons I'm interested in learning more, because their capital structure is intact because Kyle and his family own, I think, over 10% of the float, right? Like when you have actual skin in the game, you don't want to see your share structure blown out of proportion, right? It's just
Right.
common sense. So let's leave it there. And Don, thank you again for everything. And
Sure.
thank you everyone for watching the Feneck Commodities Report. We'll be back next month. Take care.
All right, John.